Every digital interaction that you will have AI as part of the system that you are interacting with.
Barron Opportunity Fund's high-performing portfolio manager, Michael Lippert, is on WealthTrack.
Funding provided by ClearBridge Investments, the Fairholme Foundation, First Eagle Investments, Bill Miller, Miller Value Partners, Baird, Strategas Asset Management, Research Affiliates, Royce Investment Partners, Seafarer Capital Partners, and Women Investing in Security and Education.
Hello and welcome to this edition of WealthTrack. I'm Consuelo Mack. Not a day goes by when there is not some sort of a headline about the impact artificial intelligence, which we all now refer to as AI, of course, is having or could have on the markets, the economy, jobs, and basically every aspect of our lives. As one recent Wall Street Journal article put it, spending on AI is at epic levels. Will it ever pay off? Well, one place where it has definitely paid off is the stock market. The much talked about Magnificent Seven stocks have been driving market earnings and performance for years now, but the companies within that select group who are considered to be major AI players, either through their technology, research, or investments, have recently been pulling away from the pack. NVIDIA, Alphabet, the parent company of Google, Microsoft, and Meta, formerly Facebook, have seen their shares soar. This week's guest is familiar with all of them and has substantial stakes in several of them, which we will discuss in a moment. He is Michael Lippert, the head of technology research at Barron Capital and the high-performing manager of the Barron Opportunity Fund, which he has been running single-handedly since 2006. The fund's institutional class is rated 4-star silver by Morningstar, and its retail shares are rated 4-star bronze, largely because of Barron's above-average fee structure. Now, the fund has beaten the market, its benchmark and large growth category by wide margin since inception and over recent multi-year periods. To start the conversation, I asked Lippert if AI was living up to its promise as a revolutionary technology.
I think the answer is yes so far. We've seen the incredible adoption. I would say OpenAI today having 800 million weekly active users is probably way ahead of what people thought a couple of years ago. Obviously, the multiple hundreds of billions of dollars being invested in AI infrastructure is certainly much higher than people thought. And I think about our own lives. 2-3 years ago, you would Google something. Today, you chat GPT something and you want an answer. On the other avenues of AI, how it's going to impact in the workplace, how it's going to impact commerce. We are just on the cusp of those things happening. So I think for the first couple of years of a new technology, I think it's been pretty successful.
The last time I talked to you, which was actually 2 years ago, we were talking about the baseball analogy, and you said, we're not even in an inning yet. We're in the kind of the warm-up pen. So where are we in the AI kind of rollout?
I still think we're very early. In a lot of places, we're in the first inning still. The answer bot, humans going to ChatGPT or Grok or something like that for answers, I think has definitely moved into the first few innings. But we haven't even started to see the first holiday season of AI commerce. It will happen this season, holiday season, with instant checkout in ChatGPT, and we'll see what Google's going to do. We are just starting to see like social networks with AI, Sora. It certainly had a big impact in the enterprise and code development. Almost every code writer today, developers using AI across every organization. We're seeing significant improvements in productivity. We're hearing 30 to 50% improvements in that. It's definitely impacted customer service, but most other areas, it's just scratching the surface on.
That is so interesting. 800 million users?
It's the fastest adoption in history. Before that was, Instagram, then TikTok, and now it's OpenAI. And I think pretty soon we're going to have 1 billion weekly active users on that. But remember, Meta, Facebook and Instagram, they have 3 billion people on their platform. So that's where OpenAI is going for.
So where are we seeing the most significant applications? You just mentioned a bunch of them, but where is there a significant difference being made?
So I think you have to divide the consumer space and what we call the business or the enterprise space. And On the consumer side, it's kind of what we've talked about. It is everybody now wanting answers to their questions and going right to ChatGPT, or they could do AI overviews on Google, or they could use Grok. No one is anymore going to the so-called 5 blue links of a Google search for information. So it hasn't impacted commerce yet. We're just going to start with that. And on the business side, the biggest uptake was just what I said, code development. That's
Right.
They're always early adopters, and AI is now writing code. They call it vibe coding. You basically code. You speak to your computer, in the English language, and you tell the computer what you want it to do, and then AI will write the code, and you could ask it to edit the code, change the code, and you can go through that. And so that's those are the 2 biggest applications so far.
Is it reliable?
It's not foolproof by any means. The human has to be involved. And on the consumer side, the thing that we all experienced initially was what they call hallucinations. You hear that talked about a lot more just because we've had further developments in AI. And so we went from basically one-shot answers. The model was trained, then based on its training, it would give you an answer, to what we call thinking models today. And when you go on ChatGPT or some other service, you can literally see it thinking, and also what they call tool use. Basically, you ask an AI question, a prompt, you could see it thinking, and it will show you, I checked Wikipedia, or I checked the New York Times before it gives you an answer. So that's part of the reason why the answers are more accurate. But we're not quite yet, by any means, at what I consider to be 100% accuracy.
How often are you using it in your business?
I'm pretty much using it daily.
You are?
For example, like in research, if there's a question I have about AI or healthcare or any topic, I will go to Grok or OpenAI and ask that question. And so it's really helping me get up to speed. There are AI tools today that, for example, can summarize transcript or, sell side notes and things like that, just to make you more productive. AI on just simply Outlook, highlighting, the most important emails that I should look at. So I look at those first. Am I trusting the AI Copilot to tell me all the emails? No, but I look at the ones that they tell me are the most important first. So I don't want anyone to think that we're perfect or we're done. We are still very early on in AI.
It sounds incredible when you say we're early on, when you're talking about the scope of what you can do with AI. I mean, already it's just amazing.
I've never seen technology be adopted as fast. I'm 58 years old, so I've only seen 58 years of my life. I studied history in college, so I still love history. You can look at history of every single major economic transition, of course, whatever, the Industrial Revolution, the adoption of electricity, the railroads, in our lifetimes, the internet. And then now we have, cloud computing, mobile, and AI, and it just keeps getting faster. It keeps accelerating. So again, the ChatGPT moment was not even 3 years ago, and we could all think of how it's changed our lives. And I think it'll be with us for at least a generation. I mean, when you think about computing or you think about, using the internet, AI is going to be part of that experience going forward. And I think it'll be forever. We may call it something else one day. Maybe it'll be AI 2.0 or 3.0, but every digital interaction that you will have AI as part of the system that you are interacting with.
In the here and now, which companies are leading the AI revolution?
There's several of them, of course, and it depends on what angle. And one thinks of AI or one thinks of any new technology, there's the stack or the layers. And so at the bottom layer, the infrastructure, of course, it's being led by NVIDIA, now the most valuable company in the world, but certainly other players like Broadcom. AMD burst on the scene with the announcement last week with their deal with OpenAI. Of course, TSMC is where 90+% of the world's most important semiconductors are made on their what they call fabs. So that's a really important company. Of course, the next step up will be the cloud computing vendors. Whether that's Microsoft Azure, Google Cloud Compute, now Oracle, what they call the neo clouds. The number one, in a sense, user of all of this is OpenAI, right? They're the leader in terms of the large language model. They're the user of adoption from consumers. But the other model players are Gemini inside of Google. There's Llama inside of Meta. The other private companies that people should think about would be Anthropic and XAI, which is Elon Musk's company. There's plenty of others too, but that's a pretty good laundry list to start with.
One of the newer additions from the AI space is Broadcom, which is a major holding of yours. It's now being, affixed to the Magnificent Seven. I think they're calling them the Batman stocks now.
Yeah, I heard that one too.
You and I talked about this, all the new acronyms that keep being developed. But what's the story with Broadcom?
Broadcom has two basic things in AI. So for a long, long time, they've been the leader in networking, basically connecting all the chips together, connecting the racks. They're the leader in Ethernet technology, and they still remain. But their biggest business going forward will be what they call XPUs. These are basically custom GPUs, just X as opposed to G. They call them custom accelerators. Their number one customer today is Google, who's on there, I think, their 7th generation of what's called the TPU. And for everybody, T stands for Tensor Processing Unit. But Broadcom has now announced that there are, quote unquote, 4 customers, and there are still, I think, 3 prospects. And the customers are believed to be Google, Meta, people believe ByteDance, and the number 4, it's not confirmed by Broadcom, but people believe it's OpenAI, with the recent announcement that they will spend $10 billion with them developing these custom chips. And Google has been very successful with it. Google's also a big customer of NVIDIA. We don't think that this will be a winner take all on the infrastructure side, nor on the model side do I believe it'll be winner take all. And so I believe that in terms of the foundational chips, NVIDIA will be the big winner, but Broadcom will also be an important player designing custom chips for these really scaled players who could design their own chips that are very suitable for large or scale workloads. And for the enterprise and for flexibility and agility, and also for plenty of large workloads, NVIDIA will be the leader. So we think both of them will be winners.
So as far as you're concerned, you want to own both in your portfolio because they're both major players in different and similar markets.
Yeah, the way I see AI today, it's very fast moving. Predicting exactly where we will be even in a year is hard. Certainly, we at Barron are what we call long-term investors, and the most critical thing that we think about are sustainable competitive advantages. So we're looking for businesses that have that. But predicting the world, 2, 3, 4 years hence is hard. So I hate to use this colloquialism, but you're basically placing bets around the table. And we do it based on our research, based on our analysis, because we don't know. I mean, everyone will ask me, what's the one stock? Well, I don't own one stock. I own approximately 45 stocks. And so I want to have exposure, for example, to semiconductor companies. I want to have exposure to software companies. I want to have exposure to other players in the ecosystem or the supply chain of building out the data centers. I want to have, application companies, both on the consumer side as well as on the enterprise side. And that's why you run a portfolio. So that's what we do.
What are we getting wrong in assessing what's going on with AI?
Listen, it's not clear even yet.
Yeah.
It's this year there's been a massive thing is software dead. Will AI kill software?
Yes.
We wrote our own quarterly letter. I think we did an insight piece, which was available on our website. And we said, no, software is not dead. But will software change? Will software be disrupted? Yes, it will. And I also said, we have the benefit of being an active manager. We don't have to invest in software. We try to invest in the software winners. So on the application side, we've been definitely looking at companies that have very specific, sometimes what you call domain or industry-specific data. One of our companies has been Guidewire in the property and casualty insurance industry. We have another company called Samsara who's trying to build AI to the physical or industrial world. And I really smiled when they said this on the last conference call. You can't find the data we use to train our models on the internet. So their first application is vehicles. They have more miles driven than anybody else. They do vehicles, driver safety, vehicle telematics, and now they're doing things with all different kinds of high value assets out there in the field that they can monitor, know what the location is, and monitor for other things. And the other side of software that's been very good this year would be what you call the system or infrastructure side of software. So AI needs to be secured. So the cybersecurity companies have done well. Some of the networking companies have done well. Companies that will give you the ability to put AI at the edge, a company like Cloudflare, have been very, very good stocks this year.
Are there a lot of new companies that are emerging? Are you tracking private companies as well, or are we going to see a lot of IPOs, for instance?
We'll see. To be very honest with you, we had a really slow period of IPOs. They finally started opening up. So we're starting to see some companies. Obviously, a startup company, normally they want to have an exit. Sometimes the exit is being acquired by a bigger company, and I assume we will still see lots of that in the private environment. These private companies are much bigger, right? We call them the unicorns or whatever, and OpenAI, for example, reportedly is now worth $500 billion. That's a pretty big unicorn. So I think we'll see lots of acquisitions by private companies, lots of acquisitions of private companies by public companies. And yes, some of them will grow large enough and want to go public. Exactly what the timing is, it's hard to know. Do we track lots of private companies? Yes. So we spend a lot of time with private companies, both to know how they may be challenging or disrupting the public companies we're investing in, and also getting to know them a long time before, oftentimes years before they go public, so we know, which companies we really want to participate in their IPOs. For example, Databricks is a very hot private company. I cannot tell you how many times we have visited them.
So what does Databricks do?
Databricks is a data kind of analytics, a data, what they call lakehouse company. So you have what's called structured data that might fit in a nice Excel spreadsheet. You have what's called unstructured data that could be a PDF, and they could harness all of that data and allow you to search it and analyze and kind of build other applications off of that type of data. And the public company that we have an investment in that does similar things is Snowflake, which has been a successful investment. And so Databricks is a competitor of Snowflake's. They do slightly different things, and each of them has slightly different emphases. They're trying to kind of converging on each other, but we know both companies pretty well.
Do you think OpenAI is going to go public?
Well, right now the capital markets are open to them. We may talk about it, the so-called circularity of Jensen Huang announcing that, they're going to buy 10 gigawatts of chips from him, and he will or may invest $100 billion. It'll be interesting to see. I truly don't know. I expect them to stay private for another number of years. Of course, they were started as a nonprofit entity. They're still trying to work that out. Elon was an early investor, and there's some opposition to that. I think they still have a lot of legal issues to go through. Of course, Microsoft is also a big early investor.
Talk to us about valuations, because we've had some fairly high-profile individuals saying that this is the equivalent of the dot-com bubble. How are the valuations of some of your major investments like NVIDIA and Broadcom, Meta, Tesla?
Yeah, so first thing on the bubble, which I'm sure we'll talk about more, I don't think there's the bubble. I think there might be lots of different bubbles somewhere, and yes, some of them will pop, and in other places there are great companies building really, really solid foundations. In the public markets, for some of the companies that I talked about before in our portfolio, NVIDIA, Broadcom, TSMC, for example, at the infrastructure layer, some of the software companies too, I'd say the valuations are healthy. But they're nowhere near bubble valuations. People have done plenty of charts comparing Cisco to NVIDIA. I remember early in the year, Cisco got to, 90 or 100 times EPS. And at the time, some of these charts were on social media. NVIDIA was in the 20s as a PE multiple. I just looked before your show, I think, on street numbers, which I think are low, NVIDIA is trading at about 30 times 26 earnings. But they're going to grow their earnings much faster. So a PEG ratio, right, PE to growth that people use, it's 0.6 or 0.7. And again, these are just Wall Street numbers, which I think are low.
Right.
TSMC, for example, is in the 20s on earnings. Broadcom is also in the 30s, but also growing very, very fast. So at a below a 1 PEG ratio. Google and Meta are in the low 20s, Apple's at 30. So valuations are healthy in the public markets. There are certainly areas where they're very, very high. More commodity players in data center infrastructure, places in the energy area, certainly some utility companies and nuclear companies have gone to crazy valuations. Could those bubbles pop? Certainly. In the private market, there's no doubt there are going to be bubbles in places. People can debate about OpenAI. The latest, I think we talked about it before, rumored or reported valuation is $500 billion. They'll do roughly $15 billion of revenue this year. Let's assume it doubles next year. So it's 30 against 500 billion. That's a very healthy multiple. But I would ask people, when you think about OpenAI, and today, of course, we have the Mag 7 or we have Batman, imagine what the acronym or the name's going to be in 5 years. And what's the most likely company to be part of that group in 5 years? I bet most of us would choose OpenAI to be part of that group. So yeah, it could be 500 billion today, but NVIDIA is a $4 trillion company. I think going higher, it's not going to be 8 trillion tomorrow, but could OpenAI one day be a $4 or $5 trillion company? Could be, sure. They have to execute. They have to continue to remain dominant. They have to go from us using them for free information to us using them for all sorts of, monetizable applications, whether it's commerce or whether it's, business uses, but they could be.
Are there any companies that are not on our radar screen, some of your major holdings, that you're very excited about?
One of the best companies in my portfolio, which most people know this year, is Spotify, right? So Spotify is never talked about as part of, the AI world, but of course they use AI to make sure that, all of us have these great radio stations, and they've seen a significant improvement in their margins, and they've been one of our best stocks this year. We have some healthcare companies. One of my biggest, in a sense, overweights next to an index in a company called Argenix, which is the Dutch healthcare company that does, antibody type drugs, and they've been very successful. And of course, we always have smaller companies. I would say the one that I mentioned earlier in software, Samsara, is probably not a household name, or Guidewire, not a household name. We just participated in the IPO of another cybersecurity company called Netscope. That's not a household name. I have the benefit of running an all-cap portfolio. So of course, at the top of the portfolio, I have some very big, well-known companies, and I also have companies that are, riding up what I call the long-term S curve. And we live in a world of, real big, shifts. I call them tectonic or generational shifts. Mm-hmm. And so the S curve of growth for many of these companies can last 20 years. The truth is, when you think of any business, any of the great businesses, none of them have ridden up one S curve. They've literally stacked S curves on top of each other. So, NVIDIA started out as, a gaming chip company. Of course, we all know Amazon started out, selling us books. And, today they sell everything, or we watch Amazon Prime, or, AWS is the biggest cloud computing vendor. And I could go through the list of companies. The great companies have all done more than one thing.
One investment for a long-term diversified portfolio, what would you, I know you don't recommend one stock, you are running a portfolio, but if you're running a portfolio and/or I own a portfolio of stocks, what am I missing? What should I own some of in my long-term diversified portfolio?
I think people have to, invest in AI. There's no doubt about it. And I think I would invest in a collection of some of the clear leaders today. And I think there's other, great companies that are not even considered in the AI mix. For example, Shopify, I think probably, and Spotify, the IFI companies, I joke about that. Those are great businesses. Those are winners in their spaces. They're very sustainable businesses. And I think you want to spread it around other things. I think AI will impact commerce. AI will impact media. But then there are, plenty of businesses that are not artificial intelligence businesses that, people want to own.
Can you do me a favor, though, is there one that we should all own some of? I mean, I'm looking at, NVIDIA. The last time I looked was about 12% of your, the Barron Opportunity portfolio. I mean, is that the one that no matter what is going to be a major player in AI?
Listen, I think no matter what, they will be a major player in AI. I mean, one of the companies that I think a lot of people overlook because it's a Taiwanese company, there's no doubt there's a threat, right? What happens if China invades Taiwan,
right, is
TSMC.
Right.
I mean, today, 90+% of the world's most important, most complex chips are made by TSMC. TSMC is making significant investments outside of Taiwan, in Arizona, for example, which I think is very, very positive. And you don't have to pick the winner, right? AI chips will need to be manufactured, so you don't have to pick whether or not it's going to be NVIDIA, whether it's going to be Broadcom, A&D, or some startup. You don't have to pick whether OpenAI or Google or Meta or Anthropic or who's going to be the winner. Everyone's going to need chips. So I think TSMC is a very, very interesting company with, of course, there is a risk, and that's why I think the valuation is, attractive because of, the threat.
Michael Lippert, so great to have you on WealthTrack again. Thanks so much for sharing your time with us. I know it's precious. I know you're inundated with news, lots of noise every single day. So I appreciate you taking the time out to talk with us. Thanks,
Thank you very much. I appreciate you having me on your show.
At the close of every WealthTrack, we try to give you one suggestion to help you build and protect your wealth over the long term. This week's guest is stepping in with the best investment advice he has ever received. This week's action point, courtesy of Michael Lippert, is go find the evidence.
The best investment advice didn't come from an investor. Before I got into investing, I was a lawyer, and it came from the partner that I worked for in the context of being a litigator. And he said, Mike, no wishes, hopes, and dreams. Go find the evidence. And so that's what I had to do as a junior associate, working for this partner. And it's what I do in my investment life. Every company tells us they're great. Everybody's, Wall Street is right now reacting to announcements, but we try to be at Barron fact-based investors. So we go out and we dig the facts. We go out and we dig the real-world evidence. So that advice still really impacts me, honestly, today, even though it came from a law partner of mine.
Focusing on the evidence instead of wishes, hopes, and dreams takes hard work and discipline. If Lippert's market and peer-beating performance over the last 2 decades is any indication, it works. Next week, prepare to become a foolishly better stock picker. David Gardner, the co-founder of The Motley Fool, joins us to discuss his new book, Rule Breaker Investing. I can't wait. If you are interested, feel free to follow us on Facebook, X, and our YouTube channel. Thank you for spending time with us. Have a super weekend and make the week ahead a healthy, profitable, and productive one.